Yeah, hey guys. Grant and Draco actually found this group of individuals, and we had a very good meeting with our admin team and our management team with them, and they actually helped me do my 2020 taxes. And these guys are world class. They really are. They know what they're talking about. They're on. Every time I sent an email, I had a multiple reply back, and I have nothing but just very nice words to say about them, and I'm really looking forward to them kind of giving us some guidance and some actual advice, right? Since these are the experts, and I appreciate all of you being here for this. And without further ado, Chris, please take over, sir. Thank you so much.
Thank you so much. What a wonderful introduction. Um, Tell you what, I've got my partner Smalls here, and I will introduce myself and our firm, and then we'll get into the nitty gritty. But um, we are a small CPA firm, and then we have another entity that's a law firm, and they work in tandem. And it's a nice combination, especially with crypto taxation. And I think you'll see some of that as we get down the road. We're very small. We're 12 people total, four on the law side and eight on the accounting side or tax side. And what's great about that is it makes us nimble, and it also allows us to get into niches such as crypto taxation. And with that, why don't I pause, and Smalls, why don't you talk a little bit about yourself, and then we could get into the reasons why we got into crypto taxation.
Sure. So my name's Sean. I'm a CPA as well. I've been in the industry for coming up on 10 years. I was working at a larger CPA firm when I graduated, and from there worked in their tax department for a number of years. But then wanted to move to a smaller environment where I could be of more help to my clients, get more face-to-face interaction, and actually be of service to them as opposed to just sitting behind a computer and data entering for this larger firm. So that's when I met Chris through a family friend of mine, and we've been working together ever since, and it's been great. So with that, yeah. So how did we get into crypto? So let's talk about that for a minute. So crypto has always been interesting to us, especially when you talk about the blockchain in itself. So the first big one, being Bitcoin's blockchain, where it's really the accounting system for crypto. And what makes it so fascinating is that it's really going to change the profession of accounting, and the fact that there's really no room for a lot of errors. So everything's kind of public. There's no double entries. A need for an audit for some of these companies that we've been working with doing their books. It really takes that out of the game. So for us, it's a very interesting piece moving forward on top of everything else that goes on within the crypto world. But that is what specifically drew us to crypto in the first place, to try to start learning about it. And this was back in 2018. We had a few clients that were starting to get into the crypto world and buying miners and whatnot. And so it really got us interested in it. But one of the big things that is happening now is that there's a lot more scrutiny on it from the IRS, Congress. They're all trying to figure out what the heck's going on with it. So as we continue to learn, so is the IRS. So that's why it's important to be having these kinds of conversations. Um, so
Yeah.
yeah, Chris, want to take it from there?
No, no, well said, Sean. And just to talk a little bit about the IRS here, and what they're thinking. As everybody knows, when you do your individual tax return, starting in 2019, they've got a question on there, kind of a blanket question, just saying, "Hey, are you doing anything with crypto?" Is what it really asks on this. And I think most people said, "You know what? I've got a little crypto. It's too small. I'm just going to mark it no." And I think most of the country went that way. And I think Sean and I are of the opinion that during COVID, a lot more people got into crypto. The government started to press a little bit to start to get some information because too many people were marking the box no. And they persuaded Coinbase to share information. It's to know your customer when you go into Coinbase, and you got to upload whatever credentials, your license, and your social security number, of course. So little by little, the IRS is gathering information, and they're going to look for people not paying or evading taxes in regard to crypto. And so I think we're all aware of that with the question on the tax return. That said, the IRS is trying to keep pace too. They move real slow. The tax law moves real slow. And in our opinion, they're struggling with it. So they have a tough time defining, what's happening, and crypto changes all the time. So the law for crypto taxation is very unsettled. And it's going to be a lot of our topic today is we think there's some steps you could take with your crypto enterprise to begin to protect yourself tax wise. It's not foolproof, again, because this law is in flux and the IRS is trying to keep up. But we have to be on top of this. With that, Sean, do you want to talk about IRS's enforcement efforts?
Sure. So with President Biden, part of his new infrastructure tax bill that he's trying to get passed is that he's trying to it's not specific just to crypto, but it's going to hit us in a way that it's going to be very impactful for crypto holders. And with that, I mean, he's trying to dump in a ton of money into the IRS, who is very understaffed right now. It's taking them up to a year to a year and a half to process mail that is sent their way. So they're very, very behind, not only on the audits in themselves, but very basic portions of their job. Just because COVID, they were stacking piles and piles of mail into these trucks that were just sitting there for months. So they're unbelievably behind. So what Biden is trying to do, he's trying to put a bunch of money into the IRS. I believe it's somewhere close to 80 billion. I could be off on that, but a ton of money. And one of the key incentives for him is that he wants to create a new and improved audit team. And they've got specific initiatives, and one of them is called Operation, or not Operation, but some about hidden treasures. So they're looking for crypto in general on this. So we've actually worked with former IRS commissioners who work for a firm that we consult with down in Houston, who actually was part of that team. So he's telling us all this enforcement is coming. So it's very important to be ahead of the game on this thing, in creating reasonable books and records, reporting timely and accurately to the IRS to the extent that we can, and within the scope of what laws are out there at that time. So a lot of what's out there right now is gray area. The IRS is still trying to figure it out. So we're still trying to do our best to interpret these rules in the best favor of our clients. But that's really what's happening. They're putting a lot more aggression into audits in general, but they're going to be looking at the crypto community in that sense.
And they actually are using the word operation, so it's Operation Hidden Treasure. So they've got a dedicated, or at least they have a plan to have a dedicated team to scrutinize the crypto community. And with that, as we have our conversation today, there's a couple things we want to communicate to you. One of them is this bookkeeping challenge that comes with the crypto. And we don't have a whole lot on that, but we wish to discuss it with you. And then the other aspect is a big aspect in our mind is crypto. The IRS is going to try to deem it a hobby, and we're going to talk about hobby versus a trade or business. So that's when we're going to get into some details here. Sean, anything to add to that?
No, nothing really in particular. So I think I'll lead us off on the bookkeeping side of things, where, like we mentioned, the tax law is in flux. So what we need to do is create as accurate as we can, books and records to show, hey, how much we spent on X and how much we earned. And you guys know better than anybody that there's a lot of moving pieces within the crypto world. So you guys could be working in 10 to 15 different projects that are earning you rewards, at multiple times during the day, and then you're exchanging, and it creates all these different types of tax consequences that at the end of the day, when you're trying to figure out, all right, not only what is the tax consequence of that action, but what even happened within the year. You guys are making moves to make money, but at the end of the day, we got to be able to track that one way or the other, and we got to have it be reasonable, in a certain sense. And the reason why we say that is that the IRS could come back and assess penalties. So just from a high level, from a bookkeeping side of things, we've been working with a few members of your guys' team within the Cryptonaires community, trying to determine what a good bookkeeping strategy would be. And it's really on each and every one of you guys, along with us, to determine, hey, in my particular set of circumstances, here's what I've made, and here's how much I put in, and to really set those kinds of things apart to determine what the accurate books and records are so that we can tackle it from a tax side of things. I know there's been talks with, or not really talks, but some of the folks are using Coin Tracker, which does certain things right, but there are other things that it just can't handle. From a high level side of things, we won't go too far into it, but we would like to use some sort of automated system like that. And I know there's another calculation floating around. I know you guys, a lot of you guys are in strong nodes, and I know there's a calculation floating around in the Cryptonaires community that it works. It needs some work on it as well, though. So I know um, Grant Draco and I have been talking about it to try to figure out how we're going to true this thing up so we could try to pass it along. But right now, it's going to be from an individual standpoint of determining a best practice, and we can help facilitate that. But there is going to be a lot of work that goes on your guys' end to help get this done before the end of the year. So I just wanted to get that out there. Chris, did you have anything to add?
Yeah, I do. A couple of thoughts to that. So, try to give you guys a visual. If anybody's got like an E-Trade account or a TD Ameritrade account, they track everything for you. And here's the burdens being shifted to you with CoinTracker or similar type software. And on top of that, many years back, the government compelled these brokerages to issue a 1099 statement, and it would show various transactions on there. It would show cost basis and proceeds and capital gain or wash sales or things like that. Right now, that doesn't exist. Sean and I are pretty convinced that that'll be out within 2 years, where they're going to compel certain exchanges to issue 1099s, and new exchanges probably won't come to exist unless they issue 1099s like that. So the reporting will get more sophisticated maybe in a few years down the road. So that's one thing I wanted to add. Another thing, circling back to the IRS and with them getting all this ammunition, this $80 billion, if you will, for enforcement, just something to keep in mind, that it always astonishes us how a lot of people don't realize what a burden taxation is. So to give you an example, if you kill a man in this country, you're innocent until you are proven guilty. With taxes, tax law, it's the exact opposite. You are guilty until you could prove yourself innocent. So you have to provide good records. You have to file an accurate tax return. Otherwise, the IRS actually has the authority to dismiss those items, and they could tell you how much you made. So it's really broad, and this is a very important topic that we're on about this keeping accurate books and records, which is difficult because we don't have the proper resources to do it. They're not coming out accurate right now. So I just wanted to add that layer, Sean. Sorry.
Sure.
Hey, and I want to interject really quick because this is a different format than what we're used to, and typically there's a lot of give and take, between somebody that's sitting up here and interviewing you, and then with the information you have. I want our audience to realize that if you guys are listening clearly, they understand what we're doing with Strong. They understand what we're doing with all of these other investments, staking. That's because what this firm is doing is they're literally diving into these topics so that they can understand them from the inside out. And I'll let them go into a little bit more about that. But just so you guys understand, Grant and I have met with these people personally. We know both of them, Chris and Smalls. We've met them personally, and we've had these conversations personally. And what that means is that we've kind of gone through this process of, do you understand this, and are you guys making are you striving to understand the tax law as it applies to crypto? And what they've done is they've immersed themselves into these subjects so that they can have a valuable opinion about how this stuff works. They're obviously familiar with CoinTracker. They're obviously familiar with Coinbase. They're familiar with strong nodes. So when you're going to pick a potential law firm or a CPA or a tax firm to represent you or to help you or assist with your taxes, you might want to consider a firm that is familiar with these terms. And if they're not, maybe you need to look for one. And we're not saying that this is the firm, but it's something to consider. And, if you guys could maybe discuss a little bit about the steps you guys have made to immerse yourself in crypto, because I think that's important for the audience to understand.
Absolutely. And Sean, I'm going to let you tackle that if you're willing on there. And then let me throw this out there before you start, though, too. This is just our own observation, because as we talk with colleagues, we're trying to find colleagues and compare notes and, hey, what do you think about this? And and it's such a fast moving industry that we learn new terms. You know, every 2 weeks we've got a new term or something else. It's a curveball on there. And when we talk to colleagues, we're finding a couple things out there. Guys, tax practitioners and lawyers that just aren't going to touch it. They're actually afraid of it. And then with that, that even includes some larger firms. So I spoke with a large firm last week trying to see if they have a crypto department, and hey, can we get together? Can we compare notes? And what are you guys doing? And what are you thinking? And it's a huge firm. It's a national firm. They won't touch crypto. So it was well said what Dreco said there. So you definitely vet your person on this thing. We're gonna show you guys a bit of a path today of things that we think are really important, and we can be and we are available to be a resource for you. With that said, Sean, I'll let you get into the weeds.
Sure. So let's start with, what are we doing to help, grow our knowledge on this thing? So it's actually started back in 2018. We had a couple guys that were kind of our first few clients that really started talking to crypto about us or with us, because at that point, anyone who had crypto kind of just didn't mention to us, and there was really not as much heat on it from the IRS, so no one was as compelled to report anything. They had a few minors. So, and we're not to say that we're just throwing money around. We're doing our own due diligence on this thing, but Chris and I had some talks, some drinks here or there, and we're like, you know what? What's the best way to learn about the blockchain and actually earning crypto through mining and whatnot? We went and bought a miner, an Ethereum miner that we still have today. It's not as good as it once was. It's fallen apart. We need to get some updates there, but
It's gas powered.
yeah, gas powered miner, but it's yeah. So from that perspective, I mean, we learned a lot from that. Just the basics at that point was a lot for us. Hey, how does a wallet work? What's our key? Like these different types of things that are very basic for you guys, but that was a lot for us to learn. And then over the course of the last year and a half, as crypto has kind of exploded at the beginning of 2020, we started getting a lot more clients, and we invest in different projects as well as we learn about them. I know you guys are learning a little bit from us today, or will learn about the importance of how things are taxed and how to bookkeep for it. But we've also learned stuff from your community as well. We are immersing ourselves in this project, or in these projects, as Draco was saying. It's not purely just a research perspective. Anything that we feel is a good investment as well, we've been also investing in. So we have high incentive not only for you guys to learn this stuff so that we can help you guys, but also we are also have skin in the game on this thing. So it's very important for all of us to work together on this thing to create the best possible tax planning, but also bookkeeping too. So we are right there in the mix with you guys on this thing. So from that perspective, it's a very good point. So we're very immersed. We know the terms. There's a lot of people that you might work with in our profession that either will shoo you off or don't even know what you're talking about when you're sort of talking about different wallets or miners and whatnot. So Chris, I know you were talking before. You want to give them the quick high level skinny on the crypto tax law. So we went to a presentation for, God, that must have been in June, but it was with members who actually work at Coin Tracker, and one of their presenters did a great job in presenting a lot of different opportunities that we can help walk through here on what's taxable and at what either ordinary or capital rates.
Sure, and I'll try to do this at a high level, so I keep it kind of simple. But in a nutshell, the IRS right now seems to have about 3 swim lanes on it. They got the hobbyist, they've got the investor, and they've got the trader business. And a lot of what tonight's about is going to be about the trader business that we're going to talk about on it. And just before we dive into it, everybody I think knows capital gains are taxed at a lesser rate than ordinary income. So we're going to use those two terms, capital gains and ordinary income. And right now it could be as much as just about a 20% spread from time to time, depending on your tax circumstances. So investors in crypto, you buy some coins, you hold it, you sell it later. That's going to be, if it's greater than a year, it's going to be capital gain treatment at a lesser tax rate. When you're a miner, you are recognizing ordinary income upon the receipt of your reward. And ordinary income are bracketed rates, and it could go all the way up to 37%. If President Biden gets his changes in the tax law, that might go to 39.6. President Biden was going to change the capital gains rate, which was 20%. He was going to try to possibly have it go all the way to 39.6 for certain wealthy individuals. And then he talked about a flat 28%. And right now, the way the infrastructure bill looks, it looks like it's going to stay at 20%. So most of the people on this call, Sean and I, with the knowledge we have, we think you guys are miners. I think a lot of people have strong on this, and they're mining strong. So we fall in this ordinary income bucket under the mining swim lane, and we don't want to be in the hobby bucket. And the hobby bucket, the IRS says if you have a hobby, and if they deem the crypto activities that you're doing a hobby, you're denied all expenses, but you get the privilege of picking up the income. So by all means, we need to avoid that. We don't want the IRS coming in going, hey, you have a day job. This crypto stuff's your side hustle, and you're a hobbyist, and we're denying all expenses related to this. So with that, we want you to be a trader business. And Sean, you want to talk a little bit about being a trader business?
Yeah. So there's a couple different ways. So it's all about substantiation with the IRS. So they're inevitably going to look at, we got a big crew here today. The chance of audit for everyone is pretty low, but we're all in the crypto game. So it increases our likelihood just because it's so new. So there's going to be folks probably in this group that get audited. So everything is looking at substantiation and creating a reasonable picture with the IRS. Here's why why this is not a hobby for me. Here's why it's a trader business. So what we want to determine for the IRS or help paint the picture is I'm truly doing this for a profit motive. I mean, that part won't be hard for us to show because at least recently, the cryptos are doing well. And they hopefully will continue to do that. So we're all making profits for the most part. I mean, there's different things that we're reinvesting into, and we can talk about that stuff at a later date. But for the most part, we're not just throwing money around willy-nilly on hobby investments. Part of it, I mean, you're part of this community that you are subscribing to help you learn to invest further. It's not just this one-off hobby where, hey, if you lose your money, that's all good. So to help show that, to substantiate that to the IRS, it's important to build a little bit of distance between you personally and this business. So with that, we would recommend that every single one of you set up an LLC. Whether or not it's just you individually working on this, you could set up a single member LLC that's disregarded for tax purposes, which we'll talk about in a minute, why we will take it one step further just to build some separation from you and this business. Or if you have partners in it, you could set up an LLC that wouldn't be disregarded for tax purposes. You'd actually file what's called a partnership tax return. It's on a form 1065. So there's actually a separate business tax return. And we are in the belief that creates a lot of a big argument for why this is not just a hobby. Who would set up a separate LLC, have it pay fees for a separate tax return and whatnot to have a hobby? So that starts to create that argument. You have your separate books and records. You have your separate bank accounts. Because as you guys get further into this, you're not going to be able to hold everything in your separate wallets, whether it's through Coinbase, MetaMask, and things like that. You're going to have to pull money out, and you're going to have to get into a PNC or something like that to convert this stuff into cash in order to, one, unfortunately pay some tax, but then also utilize it to spend on other items to help substantiate the fact that this is truly a business. So once you have that separate bank account, business bank account, in the eyes of the IRS, it's a lot easier to paint that reasonable picture. We're not trying to pull the wool over anyone's eyes. We just want the IRS to see this isn't a community of people who are doing this as a hobby. We're trying to do this for profitable and to an extent where, hey, we may be able to quit our day jobs. But this isn't just a one-off thing on the side. So the reason why that's important, as Chris mentioned, you don't want to be a hobby because none of your expenses are deductible. So part of the LLC and all that tells the IRS that this is, you have ordinary and necessary expenses within your business that you should be allowed to deduct. And once that is determined by the IRS, there's certain fees that we know we're paying for, whether or not it's our investments. Some of them, we've got different types of investments that are deductible and other ones which are truly an investment where we're, from that perspective, just building basis. And a lot of this is, I'm not sure how familiar everyone is with taxes, but I don't want to go too much into the weeds, and we could certainly help sort through that with individuals. But those certain expenses we want to deduct, but everyone knows gas fees right now are expensive. You guys got maintenance fees and things like that we want to be able to deduct, as opposed to just recognizing all the gross income that comes from your investments. If you can't deduct anything you're putting in because they deem it a hobby, then you're at an absolute loss, because then you're gonna have to pay a ton in taxes on top of these fees. So
Yeah,
that's really
Sean.
the big thing there.
Oh, no, and I'll add to it, and it's a little bit redundant, but again, the big takeaway today is try not to be deemed a hobby on it, and probably the thing where you can relate mostly, where IRS attacks hobbyists all the time, are horse racing. They don't believe guys that own racehorses they don't have a profit motive, because racehorses never win. It always throws off a loss, and the thought is you could take that loss and offset it against your other ordinary income. So the IRS comes in all the time on horse guys saying, hey, you don't have a trade or business here, it's a hobby. And a lot of your activity, if you guys don't have an entity set up, your activity is getting reported on your individual income tax return. And if it's falling under the investor threshold, it's getting reported on a Form 8949 or a Schedule D, it's called. Or if you're in the mining business, it's getting reported on Schedule C, that's called the sole proprietorship. And it's still, all of that's still contained within the four corners of your individual income tax return. So these entities we're proposing, if it's a single number LLC, you can report on Schedule C on your individual income tax return, but we want to get it off of your individual income tax return. We want to have a separate tax return. So we either, like Sean described, we make you be a partnership and you file a separate 1065 for your crypto business. And that's called a flow through entity. And whatever happens on that 1065 flows through to your individual income tax return anyway. So you get to the same point. But you've got a separate entity, a separate checkbook. It's got its own social security number, the business does, called an FEIN, a Federal Employer Identification Number, so that IRS could clearly see the separation. And again, the fact that we're trying to demonstrate that this is a trade or business. The other side of the coin, not the other side of the coin, but in the same context, sometimes rather than a partnership, you'll be an S corporation. It's just an election. So a single member LLC can elect to be taxed as an S corporation. That also files its own tax return, and all the money from that separate tax return passes through, not all the money, all the profit passes through to your individual income tax return. So those are a couple high level concepts, but you could see this separation by setting up these separate entities, which is one of the main things we recommend that you do for your crypto business. Sean, anything to add there?
No, those are the big things. And just from a high level, as we are talking about this, I think we're getting to close to a point from our perspective. We've covered a lot of what we want to talk, and we want to hear from you guys and Draco if you guys have anything you guys want us to expand upon. But as we mentioned at the beginning of this, we are part law firm, part accounting CPA, so we can help from both perspectives in setting up the LLC, getting you set up with on the right path of the corporate formalities of truly making that distinction that this is a business and not truly just a hobby. And then from accounting and tax side of things, a lot of what we've been talking about today, we can dive into a lot further in detail as we all continue to grow our knowledge on this, but then also just from where we are today and kind of what the next steps need to be, towards stepping towards April 15th of next year. So there's going to be a lot going on, but the work needs to start now, as opposed to, in the second week of April when you got 4 days to file your tax return. So just wanted to stress that we are having this conversation today, and the tax season doesn't necessarily start until February, March, but there's a lot of work to be done from everyone's perspective before that goes. So even if at the end of the day, you guys have your own CPA or attorney setting up your LLCs, I'd recommend to start working on your accounting and your bookkeeping and all that today, as opposed to deferring it, because there's a lot that goes into it, and there's a lot of there's a lot of gray areas in there that you want to make sure you're covering now and addressing with your professionals that you're working with.
No, Sean, well said. Yeah, time is of the essence. That said, you may have mentioned this. Your 2021 is pretty much locked in. We're at November 23rd today. So a lot of the stuff we're proposing becomes effective for your 2022 and beyond. And then again, we want you guys to keep in mind the IRS is playing catch up. So as this happens, when we get you set up, we do expect that we're going to have to pivot, down the road as the tax law changes. So we'll have this new act that comes out from President Biden, and we'll see what it's got in there for crypto. And then we know he's going to take another swing at the bat, and there's going to be another passage that happens later in the year or next year, and we know there's going to be more crypto in there. And to backtrack a little bit and give you some of the things that the IRS hasn't figured out yet, on tax returns, if you have a foreign bank account or a foreign trading account, or foreign assets, and the value is greater than $10,000, you have to file an FBAR. It's an information report to tell what country, what account number, all of that stuff, and identify your account. And with crypto, right now, the IRS isn't saying that you have to file an FBAR with your return, but the question becomes, where is the crypto? Is it in a foreign country? Is it up in the sky? We don't know. So this is the IRS trying to figure it out, and change over the next 10 years, quite frankly, at least in the next 5, is going to be inevitable. So getting us on the right path early is good, and then being prepared to pivot and evolve as we work on this, because the tax law is going to evolve. We could help you with that. We could work together. So Dreco, we might be at a good point for questions, Sean, you think? Or
Yeah, I think so.
okay.
All right. So what we're going to do is, so if you guys are going to put your hands up, I'm going to pull you guys up here one by one. I'll only pull one up at a time. And if you don't come up on the stage within the time that I invite you up here, we're going to have to skip you within a few seconds, because we're going to keep this moving. Just remember to keep it professional and respectful. All of our community guidelines are in line here, and I don't expect you guys to come up here and sound like a bunch of apes, grabbing onto bananas and buying stocks or bonds and crypto. So be respectful and ask good questions. So Andy Bobandy, you're up. That sounded very professional.
You guys can hear me?
Yep, we can hear you.
Excellent. First of all, thanks guys for doing this and presenting to us certain information we all need to get in touch with. My question is, right, most of us probably don't have an LLC set up yet. Can we pull our miners or our nodes into an LLC next year, even if they were purchased as a sole proprietorship this year without a business?
Yeah, I can handle that one. So absolutely. Sure. So what's going to happen? I mean, the sooner you set up an LLC, the better. And we'll, whether it's through us or through another attorney, you probably want to get that set up. And then what'll happen is any assets that you have personally, you'll contribute those from a accounting and tax perspective to your new LLC. So whatever your basis is, so whether or not you're able to deduct them, or if they're just staking or whatnot, and it's just assets that you have, will be pulled on to assets of the business now. And you certainly can pull them in. And then one thing, just because I know a lot of people don't have their LLCs, is you're not out on just trying to deduct things right now. I mean, a lot of it's going to flow through your personal return on your sole proprietorship on Schedule C. So you can still try to deduct your returns. We just think moving forward, it's better to have the LLC, just so you don't have multiple years with this sole proprietorship on your tax return. So I don't want anyone to freak out about not having an LLC set up yet, but I would recommend doing that. But yes, absolutely, you can definitely pull all that into your LLC for, at the very least 2022, or potentially end of 2021, depending on how quickly you're able to turn that kind of stuff around.
Excellent. I just have one more quick follow-up question, if that's okay. So most people are setting up these LLCs or businesses for their nodes or their miners. If we're under a business, can all of our transactions, even if we're just trading coins, be put under that business LLC, or is there a separation of maybe mining and staking as a business versus just regular trading?
No, you can do it all under the business. So the business is, just like any other business can have a brokerage account with stocks and all that. The business itself can just have assets that it's trading, and all that. But just keep in mind that's all taxable transactions as you're swapping coins and all that. But yeah, you could certainly have not only the mining and staking and all that within the business, but then also just regular, if you just want to buy Ethereum and sit there and watch it grow, you can certainly do that too. We'd almost recommend you do that, just to help pull the fact that, hey, this isn't a hobby. I've got all my crypto in one spot. It's in my business. It's sitting in my LLC. Everything runs through my business bank accounts and whatnot. So that's almost the recommendation at this point, is to pull everything in to your LLC as opposed to holding crypto anywhere else. It's not required. I mean, you could certainly have assets that you hold personally, but I wouldn't recommend doing other, business activity type things like staking or mining and things outside of the LLC once you do have it set up.
Excellent.
Perfect.
Thanks again, guys. Really appreciate it.
Great questions, man. I appreciate those questions. That was good. I'm going to move you back down to the audience. Oni, you're up. Make sure you unmute yourself.
Can you hear
Perfect.
me?
Yes.
Okay, cool. I just want to say thank you guys again for joining and giving us the information. I do have an LLC, and I did submit like my tax forms to the IRS to have it be taxed as an S-corp. The only problem that I've been running into recently is setting up a bank account. I've gone to like your traditional Chase, Bank of America, even what do you call them? Credit unions. And all of them refuse to open a bank account for a business where the primary funds are crypto based. So, do you guys have any recommendations of banks or entities that we could use to open a business account for our businesses?
We'll respond to this one as a team, and it's funny that crossed my mind as we were speaking. I was going to mention that, and I know we've run across that with a couple of our clients already, where they've had a hard time opening the bank account. So it's interesting because crypto still has this taint to it where they think it's associated with the dark web. And I love seeing a crypto commercial on television. Little by little, it's coming into mainstream society. And I think the banks will come around. The banks haven't come around on cannabis yet, at least the federal banks. We need them to come around on crypto. So don't have a direct answer. I think Sean may have mentioned PNC, which I think has been receptive. Sean, is that right?
Yeah. So
Okay.
we
But
have had some
PNC is
success.
national. Is it national?
I believe
No,
so.
they're not.
Or are they not?
No, they're East Coast bank. Yeah, so I'm from New York originally, but I live on the West Coast now, and PNC is like Jersey, New York, Connecticut based.
So
We just started expanding westward. When we met with them recently, and they're expanding south and southwest. So they're trying to become a larger national bank, and they ate up two smaller banks so that they can
Okay.
expand easier. So I mean, PNC is not obviously the only answer, but that bank is growing in size as we speak.
and here's some success that we've found. With even members of your guys' community, but we're not trying to pull the wool over the face of the bank. But what they're worried about is that you're like actually an exchange for crypto. They don't want that. So you're just an end user. So really, you got to go in there. You got to either know the banker or along those lines, or go in there and you're telling them you're a financial holdings company that's working in the technology sector. And you might have a better success. You don't want to lie to them, if they start digging into it, but you guys aren't doing anything against the regulations, assuming that you're not an exchange and whatnot. So you may have better success with that. But yeah, PNC, if you're able to connect with them or other banks along those lines. Yeah, you mentioned crypto, everyone's probably going to boot you out, unfortunately, right now.
Yeah, and to add to that too, is as we set up entities for you guys, we're pretty savvy and we try our best to pick the right terminology so that you don't get stonewalled at various points like the bank like that. So much like Sean described, tech holding company, and the word crypto isn't mentioned because it's still voodoo in the business marketplace for whatever reason.
Cool. Okay. Yeah. I think that will help, because I think the biggest problem with like opening a bank like PNC, right, even if it's not based in your area, is when you open a business account, they tend to want to like meet you in person to collect all the paperwork and make a copy of everything that you have. So I think the terminology is a big thing. I know the last two banks I went into, as soon as they said crypto, they like looked up their regulations or their rules of what they can and cannot do, and like crypto is just like X's all across. So I really appreciate it. And
Yeah,
thank
you
you.
gotta proceed with caution, but yeah, those those kind of tips might help. And then each bank is different, so I'm sure you'll find one. But yeah, just gotta kind of not dance around it, but not lie. But you're not an exchange, you're not doing anything wrong, so should hopefully be able to find something.
Yeah.
Okay.
One more little tip there too is like on that S-corp tax return that you have, there's in the upper left corner on page 1 is an SIC code. So kind of look up that SIC code. That's a standard industrial classification code, and it kind of tells the government what industry you're in, and it'll tell the banker too. And then it's either on page 2 or 3. They've kind of changed up the tax forms a little bit, but then there's actual verbiage where it says, "Hey, what's your product and what's your service?" And so if the word crypto is showing up in there, change that terminology on the tax return, and you'll have better success, maybe.
Yeah, I haven't gotten the S-corp paperwork back. I just started the LLC like maybe 2 months ago, and I just submitted to the IRS. And like you guys were saying before, they're really behind on just doing anything. But I think I need to change it with the state that the company's registered in as far as like what we do. And the NAICS code, I think I need to change as well because I think that's what the bank's been asking for anytime I go in. So I think once I pick an NAICS code that doesn't specify that it's crypto based, it will probably help out.
That sounds spot on.
Absolutely.
Thank you.
Yeah, hopefully you got a good question and you got some good answers there. So we appreciate your question, and I'll send you some of the verbiage that I have to kind of help you out.
Yeah, that'd be super helpful. Thank you.
Absolutely. All right, the next one is going to be Node Spinner. And then we're going to bring Surfer up, Surfer 1.
Can't be from California.
No, there's no way. All right, guys, you got to be quick to accept these. All right, Surfer, there you are. Myron Gaines, put your hand up again because I accidentally hit an X on your name. But go ahead, Surfer. There you go. You unmuted yourself. Go ahead. We can hear you now.
Yeah, can you hear me?
Yep.
Okay, cool. So I appreciate your time. So can this be retroactive if you have an S-corp already set up? So, for instance, I started buying XRP in 2017. I've held it for a long time, and I've just now started. I know everyone's probably going to yell at me, liquidating some of those holdings to buy other projects. So can we? I'm Savina Real Estate and Investments, so I'm pretty safe on investments. It's money. Banks love money, so you're bringing money to the bank, right? So I think we're safe on that. But I don't know if I can go back 4 years and add all this into it. And my second question is there anything that can connect our wallet to collect all this data? Like Etherscan. I'm not a tech guy. I'm an econ guy. I'm the worst at keeping records. Unfortunately, that might be my nemesis. But I know I saw CryptoTrader.tax, and you can connect your wallet to that. But I'm kind of leery about connecting my wallet to anything. So any help on that would be very helpful.
Shawnee, why don't I take the first part? You take the second part. Okay. So on the first part with going back in time, you bring up an interesting point, and it's sort of a judgment call, and we can help you weigh that. Let's talk about it kind of in reverse engineer it. IRS has audit rights that span back 3 years. Is that right, Sean? 3 years?
Yep.
But if there's greater than a 25% misstatement of income, which could be the case if there was crypto and we had profit and we didn't report it, then that expands the statute to 6 years, and they can go 6 years back and audit you. And if there's fraud, if they deemed anything to be fraud or you willfully didn't report it, then the statute's unlimited. They go back as far as they want to look for stuff. So just keep that in mind. That's just something I wanted out there with the IRS. So if you had substantial crypto profit in the past, it might be worth a conversation to figure out, should amended returns be filed and should some additional tax be paid. So that's part one on there. It's a judgment call. We'd have to do kind of an evaluation to figure out, does it make sense? Do you need to amend this, or do we just pick it up in a current year and go forward? It would be something we'd have to talk about. Sean,
is
you
that
want to take part two?
And
Oh,
so? Is that kind of the honor system? I mean, so if I wasn't asked, I was just asked this year from my accountant, do you have any crypto holdings? And I said yes, I do for this year. I'm not trying to be shady. I'm not trying to skirt the issue. But is it kind of like okay, yeah, I've been in this for 4 years. I need to go back and do this.
well, remember you're
go ahead.
guilty until proven innocent.
Correct.
So
All right, got it.
yeah, with tax law. So if you can't sleep at night, we literally have people that come in. It's something like this is bugging them, and they're like, "Listen, I got to fix it. I think they're going to come for me one day." And then right now the audit rate is real low. The exception might be people in the crypto world, and then we know President Biden, what he's trying to do is he's trying to push money out there. He's on the spend, and to cover that spend, he's going to go audit, and we know crypto's in the sights on this thing. So got to evaluate the facts and circumstances, and see if you can sleep at night or not sleep at night, and then that all enters into part of the decision. I hope that helped. I don't know if that
Yes, thank you.
Okay. And then part two, Sean, you want to get that one?
Yeah, the second part, I mean, I don't have anything specific right now, but we're looking into different things like coin tracker and things like that potentially could help. So it all depends on the particular investment that you're doing, or if you have different activities, nodes, staking, and all that, it makes it more complicated. So if you're just buying and selling uh, XRP or whatnot, whatever you mentioned, then it wouldn't be as bad. And there are sites out there. To be honest, I have not vetted them from that standpoint too, because the old saying is not your key, not your crypto. So you don't want to be giving that away and for someone to just take it. So you would have to vet it pretty heavily before letting someone download all that and having access to that kind of stuff. So at this point in juncture, no, we don't have anything, but we're continuing to look for that too, because we have clients in the crypto arena, and we want to make their lives as easy as possible, because then that helps us at tax time. So if we find something, we'll be sure to pass it on to Draco and Grant to pass it on to the community.
And
Cool.
quite
All right.
frankly, that's what's keeping us up at night too. We're really worried about the quality of the information that comes to us to do a tax return. And I worry that in a lot of cases it's going to be impossible. You know what I mean? And then you worry about filing a late tax return and stuff like that. So that comes back to that bookkeeping problem. So the big two things today are the bookkeeping. We want top of mind. It's real important, and you got to get working on it now. And then part two is getting this trader business set up to avoid the hobby loss.
Okay, appreciate it.
Thank you for your question. All right, the next person we're going to bring up, I accidentally put Myron Gaines down at the bottom, so I just brought you back up here. Sorry, I X'd out on you.
Okay.
Yep, we can
Thank
hear
you
you.
for talking to us for this. I just started building my crypto portfolio, so I don't have too much right now. I was wondering, is there a certain amount that I should be making before I consider doing LLC? I do have the plan to start building this up, or is best idea just to start it and just put everything in there now, even though I don't have much?
So I guess it is just kind of an exposure standpoint. So depends on how much you're putting in. Everyone's got their risk tolerance on this thing. Really, what it is that could you live with the fact that if the IRS audited you and determined, that's almost the kind of scenario that you're in, where you have a little bit that you've put a little bit in. That's like almost an ideal hobby situation for the IRS. They you've only got a little bit. You may not spending as much time as other folks, so they could come in and determine it to be a hobby. So depending on the value of the money that you put in, and whether or not you're okay with the fact that they might deem anything that could potentially be deductible as non-deductible, that'd be okay to be not set up the LLC from that standpoint. So it's really just a risk tolerance on that thing. So the importance of the LLC is to deduct, or make sure we're able to deduct whatever is eventually deemed to be deductible by the IRS for sure. And there's other items that we're going to fight for along the way. But if they deem you to be a hobby, there's nothing we can do anything deductible. So I guess it really, from a high level, there's no way to talk about it unless we talk specifically on it. But there's really no, hey, at $10,000, you need to set up your LLC number. This isn't so much about, you'll hear some people talk about with an S corporation, you save on self-employment tax, and you should do that once you make $40,000 or more. but this is less about the saving of the taxes and more about, from a traditional business side of things, it's more about being able to utilize your deductions moving forward, because otherwise you're just going to pay a ton in not only income tax but regular self-employment tax. You're going to have no deductions. So sorry to be kind of vague on that and a high level, but there really is no special number. But as you start to ramp up, I'd say you definitely need the LLC. If you only got a little bit right now and you're just kind of dabbling to kind of see how it goes, then maybe it's not as important.
Thank you.
I
That does
think
make sense. Oh,
yeah,
go
I think
ahead.
that's
Sorry.
well said. No, and it just shows it's kind of funny because the tax law is not black and white. It's a facts and circumstances driven thing. And you're a great example. You posed a great example. So if you're in for the long haul and you got 10,000 and you say, hey, I want to make 100,000, that sounds to me like a profit motive in a trade or business that you have. And yeah, the investment is worth it. But if you're kind of parked at that 10,000, you're just kind of experimenting, and it sounds more like a hobby, at that point in time. So it's facts and circumstances, and we're happy to talk to you about it. And intent's a big part of the law here.
Okay, thank you so much. And the thing is, would there still be enough time to set up LLC, I guess, for this year, going back to for everything that I've done this year? I know it's kind of getting late in the year.
Yeah, no. So nothing is retroactive when you set up these entities. So they actually have a birthday. Yeah, when they get organized. So you're going to be what you are up until the point when the LLC is given birth, and that's when that separation happens. So there'll be exposure up until you get the entity set up, but no, that is a black and white line in the sand, if you will, from when you give the entity birth.
I see. So when LLC is set up, then I'll start moving, I guess, whatever I have under my name into the LLC.
Correct.
Okay. All right. Thank you so much. That makes sense.
Sure.
Hey, great questions, man. Thank you for coming on up. Go ahead, Chris.
Just to add real fast too, with the LLC, I just want to go back and reiterate the if you set up an LLC and it's just one person in there, it's a single member LLC, and it still ends up on your individual income tax return. So that's a case where you want to make an election to be taxed as an S corporation, which files a separate tax return. And again, the motivation behind it is we want the separation from you personally from your trade or business, which happens to be crypto. So I just want that clear. So in case a bunch of people go set up LLCs and are a single member, they didn't really gain any ground. Helps, but it's not as foolproof as what we're proposing.
Yeah, absolutely. And I just want everybody to know, there's at one point we had 174 listeners, and there's a lot of people with questions. We're going to try to answer a few of them, but we're going to be limited by time. So the next person is up. I cannot pronounce that. I know my limits. I can't pronounce that. You go ahead and unmute yourself, and then please pronounce your name.
Hi, can you guys hear me?
Yep, we can hear you.
Great. Okay. Sorry, not the best time to be at the gym, but thank you for accepting this. There's a question that I've been able to answer for days for myself. So I know minors generally, there we go, sorry. Minors generally, from everything that I have seen, are treated as service revenue by the IRS, which, like you said, self-employment income, which would direct you towards an S-corp to only claim like a reasonable salary for yourself so that you're only paying self-employment income on a portion of that. However, I'm wondering how the IRS would recognize a minor within an S-corp versus out of it, because you can't really claim revenue on an amount that's constantly changing. The way that I would have normally thought about this would be that if it's in an S-corp, you're, instead of building revenue, you're building assets. And so the mining tokens just sit on your balance sheet as an asset until you sell them, and then you recognize revenue when you sell them, and then you would claim maybe like 20% or so wages for yourself, subject to self-employment tax, because you really don't have that much, you're not putting that much time into it. You're not performing much services, kind of more of a passive play. So I guess I'm wondering what your thoughts are on that. And then also, where would you suggest looking for information to keep up on this? Because and when I say this, I mean the IRS's changes and new guidance and FAQs, or other, I don't know, articles or court rulings or anything, because there's next to nothing online. So I'm really curious as to how you guys were able to come to the conclusions that you did when deciding how to treat a lot of these weird situations.
What a great question, Sean. I'm going to let you answer this, and I will buy you a drink later. But before we go into it, and so it's interesting because you went deep into the woods and you've done your homework and you know what an S-corp is and you know what self-employment income is, and we left that all off the table because it's a little bit more sophisticated. But one thing caught my attention that we may not agree with you, and maybe Sean will straighten me out on that. But as you're earning these rewards, they're not adding to the asset on your balance sheet on the S-corp. They're actually taxable as ordinary income. But we'll address that in a minute. I'll cover the part where you can get resources. Actually, irs.gov is a great site. If you guys have never visited irs.gov, a lot of materials out there, and they do have, I think it's a revenue procedure or maybe a publication that's out there on cryptocurrency. And that would be a good starting point, but the language in there might be too technical, from a tax standpoint. So we'll have to find other resources. And then we have sophisticated tax resources that sometimes create client letters that are in more layperson's terms, at least for the tax stuff. And so we'll look into that and see if we could scrape any together and provide them to this forum, which would be great. But Sean, you want to take the heavy lifting question here?
Sure. So from that standpoint, so what's important to understand for an S corporation, it doesn't pay any federal income tax. It's a pass-through entity. So for anyone who's not familiar, an S corporation files a separate tax return, but if it makes $50,000, it's going to pay no taxes to the IRS outside of payroll taxes, which is separate. So it's not an income tax. It's not going to pay any income tax like you would on your individual tax return. It's going to produce what they call a Schedule K-1 that flows through to your personal return, and that's where you get taxed. The one thing you brought up, though, is that it does save you on self-employment tax, which is actually 15.3%, which is a significant amount. And what's important to understand, both at, whether or not this stuff is in your individual name or within the business, the second a reward, an airdrop, that's a legit one, or, any other kind of income earned through mining, nodes, staking, is going to be ordinary income to you at the value that token hits your wallet on that date. So if on yesterday you received a coin from your nodes, you received one coin that was worth $500, that's $500 of ordinary income to you. But if the value increases to $800 and you sell it, that produces a $300 short-term capital gain, because you got unrealized gains in the coins as the price of the coin fluctuates. So I guess what I'm trying to say is that from your perspective, I understand what you're saying. So you're going to increase the balance that you have of your particular crypto as you are mining or whatnot, but you're actually going to be recognizing income along the way. So what's going to happen is you're going to recognize the income on the business tax return. That's going to kick out what they call a K-1 to your individual tax return, and you're going to recognize the income there. And what will happen is, as you mentioned, you got to take that reasonable salary that the IRS requires, because if you don't, they know that you're going to save all the self-employment tax, this 15.3%. So say you make $15,000, or not $50,000 on that. If you didn't have this S-corp set up, you'd pay $7,650 in self-employment tax. What the IRS is going to say, if you set up the S-corp, you save that $7,600, which is great, but they know you're saving that. They're going to make you contribute into Social Security and Medicare. That's effectively what the self-employment tax is. So you may take a salary of $25,000, so you end up saving half of that. But either way, you save money. But that's the reasonable salary you're talking about. So unfortunately, it gets back to the bookkeeping issue that you're going to have to be able to track what coins came into your account and at what value. So that's part of where, you got to end up looking either, you got to comb through your statements one by one, which is going to be nearly impossible, or we come up with some sort of reasonable method. Like within a week, you received X amount of coins and they were, the price was average during this week was Y. So now I'm going to recognize this amount of ordinary income, and then I got unrealized gains of this. So it's going to be things like that if we can't get an automated system either through Coin Tracker or one of these other sites that, as a community, we all trust. So there's going to be a lot of vetting done on our end, just regardless of who we work with and who we don't work with from this community. But also, we've been working with the Cryptonaires folks a lot, so we want to be able to produce an answer if we can, or at least help vet answers that you guys find. So if anyone finds a system that's able to automate this by pulling data from these wallets, we're happy to look at it to see if it looks like it's accurate. But otherwise, yeah, it's going to be a very manual process, which is going to be nearly impossible. And that's where I talk about the reasonableness when we're creating our bookkeeping procedures. That is. I hope that helps.
It does. Is it okay if I ask a couple quick follow-ups on what you said?
Sure.
Okay. I just wanted to ask, I think you mentioned guidance that you guys provide. Do you have client newsletters or like website newsletters that we could sign up for, or articles?
Specific to crypto or just in general? I guess
specific to crypto. Yeah.
Not right now. I mean, we have client communications that we send out on various items, but it's something we could work on with your guys' community as we're coming up with ideas. We could always share them with the team. Chris, you got anything you want to add there?
No, I think we're being inspired, so maybe we should come out with some. So
yeah,
be good.
A lot of what we do.
Stay tuned for the for the newsletter for crypto.
There it is.
There it is. Yeah. So, and a lot of what we do is communications with professionals in the field, because, like you mentioned, there's not a lot of guidance coming from the IRS, and when it does come out, it's very vague and convoluted. So it's a lot of talking with former IRS commissioners, congressmen, things like that, that we are lucky to have some connections with. So it's things like that. That's where we I don't know, are determining what we think is reasonable and what we can get by with. So those are the kinds of things, and we could produce, newsletters and things like that, or at least communications or some along those lines. We're happy to help however we can. So, as we move forward on that, if we get something formal like that going, we'll definitely let Draco and Grant know, and then they can communicate that to the team or the community here.
Absolutely.
Great.
So
And then,
we're going to try to get at least 2 more people up here, unless it's super important. Let's try to see if we can fit 2 more people up here before we expire with time.
that's okay. Thank you.
Thank you very much. Paulie, go ahead and come up. And then after that, we'll have one more person ask a question, and then we're going to start going over time. So unfortunately, you guys will just have to wait until our next one. We'll do this again in the future, and you guys will have an opportunity to try to ask more questions, but we just don't have the time or the resources to answer all these questions. We'll be here until midnight Central Time. So, Paulie, go ahead with your question.
Hello, can you guys hear me?
Yes.
Make
Okay,
sure
great.
that you unmute yourself. Unless I muted you. Hold on.
Thank you guys for coming. I really appreciate you guys having this talk. It's really important. One of my main questions was like, let's just say I spoke with one of my accountants and there wasn't much we can do now because it's the end of the year. She recommended buying a property and doing a cost seg, but it's already the end of the year, so we'll just do that next year. But I did ask her, what if for example, the end of the year, I buy like December 30th December 30th, I buy 20 or 30 strong notes to offset my capital gains and claim it as a loss. And she didn't really have an answer to that because she didn't really know too much about crypto. So my question is, can I claim it as a loss, like by building the note at the end of the year to offset my capital gains?
So great question. It's a tricky one. So here's where we're at. So there's a couple different things before year end. Let's talk about more generic deductions that you for sure could get. Everyone's got various strategies on how they want to maintain their various wallets and whatnot. So if you have a separate laptop that you need to buy, or a safe, or something specific just to crypto that you buy, or if you're using a certain office within your house, there's potential deductions there that you guys could use. So those are the types of things to look at from a non-crypto side of things, but it's also for your crypto business. But from a strong side of things, you're going to get tax preparers or professionals that all have varying opinions on this. The one unique thing about strong right now is that when you invest those 10 strong tokens to build a node, you can't get it back, or at least right now you can't sell it, you can't sublease and all that. I know they're talking about potentially changing that down the line. But so in theory, it's more of a deposit on rent or something along those lines. So you're going to have to talk with your professional, and if they're comfortable with that, they're going to have to read the smart contract and determine on their end. Right now, that's the way we are leaning. That we believe that it to be deductible, just because you can't get it back. But everyone's got to do their own due diligence, and there's a risk associated with that, just because the IRS may come in and make a change, and then you're talking about additional tax and potential penalties down the road. So everyone's got to have their own risk tolerance on this. Everyone's got to do their due diligence. So I'd recommend to send your professional that smart contract and point out those specific pieces, because there are people in the field that just feel like, oh, everything in crypto, you should just bow down to the IRS and make everything non-deductible. But in certain contracts, it's not truly an investment, because you can't just take your money back. You can't sell it. So that's what I'll say on that. I'm not going to say for sure, yes, go ahead and deduct it, but I would say do your due diligence, and then every professional is going to have their own opinion on it. So I wouldn't go back to your CPA just being like, hey, these guys said I can deduct it, but I would recommend they do their due diligence on this thing.
Okay, got it. Thank you very much. That was my question. Appreciate the help.
Thank you for your question. That was really good. I appreciate it. Quick question. I've been getting a bunch of texts on the side as well. One of the major questions that I've been asked from multiple people is, how are NFTs taxed? I guess that's, you buy an NFT, it's digital art. It comes in at a basis price. So let's say it's $1,000, and then you sell that NFT for, let's say, $10,000. How would that be taxed?
Sean,
Yeah.
I'm thinking it's a collectible. You want to hit it? Wouldn't it be the collectible tax rate?
Yeah, you can go ahead.
No, go ahead.
Okay, so yeah, there's the collectible tax rate. So what ends up happening, I mean, it's not purely a long-term capital gain, because I'm sure, well, I guess it depends on how long you're holding it for, but a lot of these things are getting turned around pretty quick, I imagine. But once again, kind of up in the air. But when you sell pieces of art or things like that, collectibles are actually taxed at a different rate. So they got a long-term capital gains tax rate of 28% if you've held onto it for longer than a year. So that's the way we are interpreting it, because the NFT, the closest thing that it is, as far as quote unquote the real world, or for lack of a better word, but what the IRS understands at this point is art in that perspective. So a collectible, if you hold on to it for a year, it's going to be 28% tax bracket. Otherwise, if you only hold on to it for less than a year, it's going to be a short-term capital gain, which doesn't get that preferential rate. So it'd be ordinary income. So whether it's in the LLC or on your own, you potentially could be picking up just ordinary income tax rates, whatever bracket that you're in, whatever that appreciation is, that is when you sell it.
Perfect. I think that's a pretty good answer. Baker, are you ready to go? You're muted. You're up for your question.
Yeah. So first, I just want to say I appreciate you guys being here tonight, answering all these questions from us. So I heard you say that, y'all have talked to a lot of people in your field, on a professional note, as far as what they think about how to do all this. So I follow a YouTuber named Mark Kohler, and he talks about needing what he calls the trifecta. Are you familiar with that? And if so, what are your thoughts on that?
Specifically what he's talking about? No, I'm not familiar with Mark Kohler or what he's referring to in the trifecta. If you got what the three things are, I could tell you what my thoughts are on the three.
Yeah. So basically, he says the trifecta is basically, you have, between you and everything, you have a trust set up. And then on one side of your trust, you have an S-corp, as long as you make the amount that you need to have it. And he said, you put nodes and miners in the S-corp on that side. And then he says on the other side, you set up an LLC as a holding company, to put your coins that you stake and things, your moon bags and stuff like that. And I think he said the trust is a charitable remainder trust, if that's maybe correct. I'm not sure. CRT. I'm gonna go with that. Sounds right. But am I tracking here at all?
So that depends. So there's a couple different things there. So when you start talking trust, you get into just liability issues, and then estate planning for the most part. So the trust could create a little bit more of a I don't know, distance between you personally and those assets and the hobby losses. Just because if you have an irrevocable trust, which is what a charitable remainder trust would be in there, you end up uh, producing a level that there's actually another taxable entity. There's the S corporation, which he's saying that is owned by the charitable remainder trust. Is that what you just said?
Yes.
Okay. So then that is owned by a separate entity. That's not even owned by you, but you can live off of the profits of that. The thing about a charitable remainder trust, depending on what you're trying to do with it on the end, just the way it says, whatever's left over after you pass away, goes to
Yeah.
the charity. It's not passed on to your family or your heirs and whatnot. Or depending on how the trust set up, it may be set up that your kids can get it, but then after their passing, it goes to the charity, which is fine. In all intents and purposes. But if you're trying to build a portfolio to pass on to your heirs, to pass on to their heirs, and all that, that's not the way to do it. But it could work just because there is deductions associated with making those charitable contributions, or at least right off the bat, because then there's this annuity that the charity gets throughout the lifetime of the trust as well. So the trust or the charity's benefiting, you're benefiting, and then at the end, the charity gets the money. So it's really an estate tax play. If you're in a position where you're going to be paying estate tax down the line, and you want to have some of your assets held that you can utilize the profits from along the way, along while you're living, and then the rest to kind of split off so that your heirs don't have to pay this hefty estate tax bill, which is pretty hefty these days. Then that could be a good play. That's one of the more complicated ones, and I'd be happy to talk about it further. But I guess that's all I've got on it right now. But yeah, that's really seems like more of an estate tax issue. But I'd be happy to talk about it further and actually go look at Mark Kohler's stuff on this, and then we could have a further discussion if you wanted to reach out on that.
Yeah, we'll research that, which would be pretty good.
That would be awesome.
Yeah,
Yeah, I have that contact for you, and I have those videos for you guys, so I'll send that stuff to you after this.
Awesome. And then estate planning's going to change dramatically. It was going to change through a couple of these Biden bills, but it looks like it'll hold true. But in 2026, there's a lot of stuff sunsetting, meaning it's going away, reverting back to the way it was in the estate tax law. So interesting concept there that is sure to evolve. So,
But
Thank you for your question. I appreciate it.
From a high level, you are just creating less of a hobby. So I'm not going to shoot down the idea.
Okay. So, I guess like to follow up on that, like, is there a level of income where that would make more sense, or is that kind of once you get into the S-corp minimum, it opens up for that?
Yeah, that one would be one I'd have to look for the reasons as to why he's doing it to see, if it's truly an estate tax issue, then you got to accumulate. Right now, the estate tax exemption is at $11 million. You'd have to accumulate $11 million of assets after tax before that would really make sense, if that's why he's doing it. But I'm happy to take a look at that, and then if Draco can send me that stuff, I'd take a look at it, and then I could communicate that, and he could pass around the word or what we find, or I could have a separate conversation with you, Baker, if you would like.
Absolutely,
Sure.
I'll send that to you.
I appreciate
very
it,
much,
guys. I mean,
Baker.
it's really interesting stuff.
Absolutely. Thank you very much for your question. That was a good one. And I think a lot of people in here know the Mark Kohler internet icon, so we'll try to pass that information along. So that was a good question. Thank you. I'm going to go ahead and wrap this up. Sorry for everybody that still has questions. We'll try to, like I said, we'll schedule one out in the future so that we can do this again. I know Grant wants to come up, and he has a few things that he would like to say as well.
Thanks, Draco, and thanks, Chris and Sean. for doing this. Sorry for my tardiness. I had some other personal obligations to attend to today. I did want to ask you guys, because we have had multiple questions about this, and I know we've talked about this on the side. We have a lot of our members that live in different countries, and they're looking for international resources to assist them with filing taxes. Do you have anyone that they can reach out to, or an organization or a group that they can contact to reach out to help them with their taxes?
We are working on that contact. So we, again, with us being a 12-person firm, we're pretty small, and we've developed these relationships with colleagues through the years. I've been doing this 30 years, and we have a couple larger firms that we hang with that have more resources than us and more depth. Part of that is international tax. We do some international tax, but they do a lot, and they do sophisticated international tax. And so we have that pipeline, and we could help navigate that pipeline for anybody that needs that kind of assistance. That said, though, we have not tapped into them to see if they're doing anything on the crypto side. But that's something I could do. I could do a reach out on that in the next week or two and see if we have a resource for everybody in that regard.
Okay. Yeah, I would really appreciate that because we do get a lot of questions for that, so we can correspond together, and then I can get that information out to them. The other thing I wanted to talk about was the bookkeeping thing, because Sean and I have been going back and forth, and Draco and that. And one of the things that is extremely helpful right now, does need some minor adjustments, is Stephen, the calculator guy's tax calculator. I would really recommend you guys picking that up, because it does give you a general idea, specifically when talking about strong nodes. I think a lot of this community started with the strong nodes, and they're running quite a bit of nodes. And that's where a good majority of that income is coming in. And it does give a general idea of, the fees that you're paying and your income, and it makes it clear and concise. And Stephen is willing to come in, for those of you who purchased a calculator, he's willing to come in and do a tutorial on how it works and the equations that he's using to come up with these calculations. And I know Chris and Sean, I've talked to them, and we will get Stephen together with him as well, or excuse me, with them to go over that. But that is as of right now for us, when we talk about bookkeeping, that's a major component because for many of us, that's a lot of where the income is coming in. And then we're investing in all these other projects. So finding things like CoinTracker or Coinly, there's a couple other ones out there. The problems with those that we're seeing is, excuse me, they don't necessarily follow Avalanche blockchain or Phantom or, the Arbitrum, all these different DeFi blockchains that we're working on, we're staking in. It's not calculating. So the bookkeeping is a huge component, and I've spent countless hours going back and forth. So I do urge you guys to use all the programs that you can get into, but it's not everything is perfect. So there's going to be a lot of back and forth, and that was really just my follow up, and just thanking you guys obviously for taking the time. We're going on almost on an hour and a half now. That you guys have been with us. The final thing I would ask is, and I think you've already hit it, if these guys want to reach out to you, we can leave your website address if you're taking new clients and you're willing to bring on these guys to help them with creating LLCs, S-corps, or just general filing of taxes. And if so, the other question would be, obviously, being around the world, many of these people, and more so in the United States, are you able to assist with filing taxes in every state, or opening LLCs and S-corps, or would you be able to guide people in that general direction?
Sure. No, we work in all 50 states right now, both on the law side and the accounting side. So none of that's a problem stateside. And like I said, I'll come up with that international resource for us as we roll forward. So no, by all means, please share our information. Sean and I are passionate about it, about crypto tax in particular. And we love what we're doing, and we're here to help. So we'd love to hear from you guys. We'd love to help. We'd love to have you as clients if it works for you. So that'd be wonderful. And Grant and Draco, thank you so much. We had a great time. Can't wait to do this again, and very motivating. So we're very grateful.
Yeah, absolutely. Just for everybody that's listening, we're going to post their information in the Tax Talk section. We'll make sure that all of you have access to that if you wish to reach out to them. Obviously, not reaching out to them for just specific questions, but if you're looking for someone as a representative for your taxes, a CPA, tax attorney, they are available. So I would like to close this out. I think that we've given this a good amount of time. We will plan another one in the near future because I know people will come up with additional questions, and we'll do our best to address them during the conversation, the live session. Thank you both for coming. I think I speak for all of us in Kryptonaires. We appreciate having you here, and hopefully we gave you a pretty good audience. I think at one point we had, like I said, we had about 174 people listening in. So thank you for everything, and everybody, thank you for showing up. Have a good night, and enjoy the rest of your holidays. It's Thanksgiving, so spend time with your families. Thank you guys all for coming. Have a good one.
Thank you.
Thanks so
we
much.
really appreciate the opportunity. This was awesome.
Have a good night, guys.
Good night.